Good morning and welcome to Axis Direct Opening Bell, a quick pre-market briefing with key global cues, overnight trends, and market-moving insights to keep you ahead. We'll start with the global markets. Overnight in the US, the S&P 500 reached a milestone level, hitting 7,000 for the first time, before pulling back as the Federal Reserve left interest rates unchanged and upped its economic growth assessment. The broad market index ended the day down 0.01%. The Dow Jones added 0.02%, while the Nasdaq gained 0.17%. Asia Pacific markets traded mixed today. Australia's S&P 200 declined 0.69%, Japan's Nikkei added 0.18%, while the Topix lost 0.57%. Moving to Indian markets, industrial production rose 7.9% year-on-year in December. The growth was led by manufacturing, with mining and electricity output also showing improvement. Meanwhile, Nifty closed at 25,343 in the previous session, rising 167 points, whereas Bank Nifty settled at 59,599, up 393 points. Nifty gave a roller coaster ride yesterday, choppy all day but staging a strong comeback in the final hour. That late surge broke a key downward trend, and if the index clears 25,348 today, the bulls could charge toward 25,500, with 25,260 and 25,000 acting as support. The Fed's policy decision is set to dictate the mood for the rest of the week. Foreign institutional investors broke a 14-day selling streak yesterday, turning net buyers with an inflow of 480 crore rupees. However, month-to-date outflows remain elevated at 36,231 crore rupees, highlighting that broader risk aversion has not fully reversed. In derivatives, Nifty futures gained 68 points, accompanied by a 2.6% rise in open interest, signaling a fresh long build-up. Bank Nifty futures showed even stronger traction, climbing 237 points with a sharp 7% increase in open interest, confirming aggressive long positioning across both indices. Interestingly, premiums cooled despite the price rise. Nifty's premium narrowed to 108 points from 207, while Bank Nifty's premium eased to 268 from 424, indicating reduced speculative excess. On the option side, the Nifty put-call ratio softened to 0.97 from 1.02, whereas the Bank Nifty put-call ratio improved to 1.14 from 1.12, reflecting stronger bullish conviction in banking stocks. Positioning data shows FIIs holding an index long-short ratio of 0.14. This suggests a cautiously bullish stance, but with aggressive hedging still in place. Retail clients remain firmly bullish, while proprietary traders have shifted toward a more risk-off and bearish positioning. Volatility trends are supportive. India VIX cooled by 6.4% to 13.52, pointing to a structurally healthier short-term rally. Despite USD INR volatility hovering near 92, systemic liquidity conditions remain stable. For the current weekly expiry, derivatives data indicates a likely trading range with support around 24,900 and resistance near 25,700. At the sector level, Nifty Energy led the gains with a strong 4.2% rally, followed by metal and media. All 12 sectors ended the day in the green, indicating broad-based market strength. Amongst the F&O stocks, Oil India was the top performer, gaining almost 10% and hitting a multi-month high on rising crude prices, while Tata Consumer Products was the worst performer, down 4.6% following its Q3 result update. On commodities, spot gold surged toward its record high near the $5,415 level, settling with gains of around 4.5%. Silver remained volatile throughout the session but ended higher by close to 4%, settling near the $116.6 level. Bullion prices are expected to maintain a positive bias after the Federal Reserve decided to keep interest rates unchanged. However, the split decision, with two officials favoring an immediate rate cut, reinforced expectations that policy easing remains possible later this year. NYMEX crude oil also moved higher, climbing toward a multi-month high near $63.6. The rally was driven by geopolitical tensions after President Donald Trump threatened further action against Iran unless it agrees to negotiate a nuclear deal. Additional support came from the weekly EIA report, which showed an unexpected decline in crude inventories while gasoline stocks rose less than anticipated. However, the strength in the US dollar is currently acting as a cap on further upside in crude prices. That's it for today. Please note that this podcast is for informational purposes only and should not be considered as financial advice. Please refer to our website for the full disclaimer. Thank you and see you in the next episode. Investments and securities markets are subject to market risks. Read all the related documents carefully before investing.